Okay, so I'm going to make a video on, this is going to be cash budgeting worksheet, and then at the end we're going to go through an ask as well, because that was part B to this question. So this question is kind of long, so we'll read through it first, and then we'll go through a worksheet and a cash budget. So Oaken Professional Laundry Services is a small business idea, blah, blah, blah. That part doesn't really matter. He decided to start operating in September as a test to validate the market. He is currently trying to prepare a cash budget for October and November using the process taught to him in order to show his parents that he will be able to manage his cash flow, a condition of them loaning him initial capital. So we have a bunch of information here. So we're going to go through some of it we use in the worksheet and some of it we use in the budget. We're pretty much always going to have to make a worksheet before we make a budget. Not sure how that's going to work in a multiple choice format, but if this were like a written exam, that would be how it would work. So he looked at the industry and considered his parents' risk tolerance and has decided that he'd like to keep a minimum balance moving forward of $80,000. The September test pilot brought him in $7,500 in sales, which he expects to collect in October. He expects to collect all of it in October. Doing some research, he projects that laundry supply purchases to cost 35% of expected sales, so in the same month, and he pays 20% in upfront and 80% within the following month. And he was able to negotiate, get his supplies from in-stock items with no lead time in September and defer all payments owing in September to October. So he got supplies in September directly, and he's paying for them in October. Then these are his forecasts for the next coming months. He expects to collect 85% of his sales immediately and the other 15% the month after. He's going to have to pay some employees $20,000 in November. His parents are going to provide financing interest-free, which is nice. Otherwise, we'd have to worry about interest. And he's going to have to buy some equipment. So let's do I'll start it over here, a cash worksheet. So the first thing is just the months, and then we want to know sales for the months, and then we want collections, and it says we get 85% during the month, and the other 15% next. Oops. So months, so we start with September, then we have October, November, and we'll go to December because we're going to need that. And then we'll go through the sales. So in September he sold $7,500. Oops, that didn't work. 7,000. Oh, numlock. There we go. In October, he is forecasting to sell 150,000. In November, he's forecasting 225,000. And in December, 75,000. We don't actually need to worry about January because it's too far along. And then we're going to worry about this number later because it's a bit different. But how collections work is we get 85% during, and 15% the next month. That's what that looks like. And then with this bit, we expect to collect all of this the next month, it said. So just moving that over here. So then our total receipts, these are called receipts, is just the sum of these two. I'm using Excel. I know we don't have, the sum to J6. Didn't work. We won't have calculators or anything on the exam, but we're also supposed to be able to do all the calculations in our head. So this is my version of doing calculations in my head, just super quickly. We don't need this number. It doesn't matter. So these are our total receipts for October, November, and December. Remember, it says here we only want October and November, so December doesn't actually matter. And then now we are going to go through purchases. So we are purchasing a month in advance. It says here they need a month lead time right here. So and it's 35% of expected sales. So for this one, for these purchases, this purchase is right here. That's going to be 35% of our 750 plus 35% of our 1,500. Right? Because we're purchasing that in month, it says. This is kind of a tricky question, and you wouldn't normally do that, but that's how we're doing it for this one. Maybe I'll move this down just once, so to split up a little. This is just going to be 0.35 times our sales. And same thing over here. Cool. And then actually just laying out our disbursements. So it says we pay 20% in month and 80% next month. But we don't pay anything in September. Remember, we pay it all in October. So again, I'll do the other ones first. So 0.2 times this. What? Times K3. And 0.8 times that. Why is it? Oh, it's because I'm not saying equals. Okay, October and November we're doing. So December doesn't matter. And then for this part, it's kind of a tricky calculation to get this number, but it's going to be all of the, it'll be 0.35 times the 750, because we're paying all of this number in the next month, or 35% of it, because we always pay 35%. Then plus 0.2 times the 150. Sorry, no, 0.2 times the 0.35 of 150. Cool, and then we're getting that number there. Hopefully that made sense. So then our total disbursements for purchases is just the sum of these two numbers. So that's our first part done. This is our worksheet. So maybe I'll take a step back and just walk through this again really slowly. So I listed out our sales for every month and then split them up based on how we're collecting them. So it said we get 85% of sales in the current month, people paying cash, and the rest we get in the next month. So I took 85% of this number and it goes right there. 85% of this number goes right there. 85% of this number goes right there. And then 15% the next month. So 15% in here, there, 15% there. Then with this 750, it's a little tricky. It says we pay it all in the next month. So I just brought that number all here. I didn't do the 85%, 15%, it's just 100%. And then I just added those all up to get our total receipts. These are the two columns that matter. And then for purchases, I did the same thing. So he's forecasted that purchases are 35% of next month's sales, or it's technically like the current month, but because they need a month in advance, it says here he require a 1 month lead time, so he has to kind of forecast a month ahead and then get those numbers. So 35% of 150, or sorry, of 225, that's a month in advance. 35% of this, month in advance. 35% of this, month in advance. This number is again a little hard because it's 35% of this as well, plus that, right? It's 750 times 35% plus 35% of 150,000. That's that number. Then disbursements is pretty much the same thing as collections, what with this weird 750 number, and we get that. So now we'll go into a cash budget. So there's a couple of things in our cash budget. We have beginning cash, then we're going to add receipts, which gives us our total cash available. Then we're going to less disbursements. That one's always there. And then we pretty much go through here and see anything else that it says that we're going to need to take stuff off for. So it says he's going to pay his employees, so I put that down as payroll. Then it also says here he needs to buy some equipment. So this one came up, if you look at it here. So he needs to stop using his parents' washer and dryer and purchase industrial units. He had a quote from a supplier for $75,600, which needs to be paid in October. On the advice of his BU 127 professor, Oken has budgeted annual depreciation / amortization expenses totaling $21,000 for the washing machines and dryers. Depreciation is not cash, so we don't include it in our cash budget. It's also not a cash fixed cost, so there's another question that's like, cash fixed costs including depreciation was $500,000. Take away whatever it says that depreciation is before you start working with that. So equipment is that, and those are the only disbursements that he has. So our beginning cash is 0. Often it says that the minimum cash balance is going to be what they start off with, but they didn't say that here. He said moving forward, but we're only doing this for October and November. So in September he didn't have that. He did his sales and whatever, and now moving into October he still has 0 minimum cash balance, but then he's going to start getting, so maybe I'll put here October, and this is going to be November. So his receipts in October were $135,000. So his total cash available is just $135,000. Then let's take away the disbursements for October, that number. Then it says he's paying his employees $20,000 in November. So I'll go and put that in right now. In November, $20,000. He pays them nothing in October. Then for equipment, it says $75,600 in October, 0 in the other month. So our total disbursements is the sum of these three things. So then we need to calculate whether he has a cash excess or deficiency. And that's just going to be the difference between these two numbers here. So that equals this minus this. And then we want to compare that with the minimum cash required, or whatever it asks. And he said his minimum cash required is $80,000. So he's going to need some financing here. Financing required. And the financing he's going to need is the difference between these two numbers. So it equals 80,000 minus 30,000. That's how much he needs. His surplus cash is then obviously going to be 0. And his ending cash balance will be 80,000 because he's got that financed amount, right? So now moving into the next month, we take the ending cash balance and it becomes the beginning cash balance of the next period. We're adding the receipts from November from the worksheet, and we're summing those two together to get our total cash available. Then our disbursements for November from the worksheet, we know equipment is 0, and so is that number right? There we go. Now it's right. I don't know why I had a mistake in my formula there. So now cool, yeah, now that's right. So our total disbursements are that. So our cash excess is just going to be how much cash we have minus our disbursements. So we have tons of cash. Our minimum cash requirement is only $80,000. So our financing required is 0. And then our surplus cash would equal our cash that we have minus our minimum cash requirement. So in most questions, what I've seen now that we have this surplus here, you would repay back your financing. So here we have financing required of $49,475. So we'd take this surplus and we'd pay back as much of it as we could, so that our ending cash balance would really just be this 205 number minus the financing that we needed, and this would be our ending cash balance. This question didn't do that. I'm assuming it's because it didn't say that anywhere in the question that he pays back. Usually it says if he has surplus cash, he'll pay it back. So it didn't say that. So our ending cash balance is just that. And this is our finished cash budget right here. It's only 2 months. It's not that bad. There's just kind of taking into account that there's no depreciation. Like, depreciation's not a cash thing, so it's not in our cash budget. Yeah, that's pretty much it. And then what should his initial ask be? So your ask, if you did your finances for a new venture, you should know this. Just add up every time you need financing before you're cash flow positive, and that's your ask. So in this case, we only need financing once, so our initial ask should just be this $49,475. It also says, how could he lower this? So he's put his minimum cash required as $80,000, which is actually the only reason that he's needing extra cash right now, right? Because he was already $30,000 profitable, but he wanted his $80,000. So there's a couple ways that he could lower some of his expenses. He could lease his machines as opposed to buying them right up. That would make it cheaper. Or he could make this number smaller. Usually your minimum cash requirement is close to your total disbursements, which is actually it kind of makes sense. It's your fixed cost for the month, right? How much you know you're going to need for rent, equipment, things like that. So yeah, that pretty much concludes this video. Hope it helped.